Credit is essentially the ability to borrow money or access goods today, with the promise to pay for them later. At its heart, credit is built on trust. Lenders give you money because they believe you will pay it back on time. The most common way this trust is measured is through your credit score, which typically ranges from 300 to 850. Several factors influence your credit standing, including your history of on-time payments and how much of your available credit you actually use. Having a strong credit profile can make your financial life much cheaper by qualifying you for lower interest rates on loans. This chart shows how credit quality affects the interest rate you might pay on a loan. Higher scores generally lead to lower costs. Remember that credit is a tool for managing cash flow, not extra money to spend beyond your means. Managing your credit wisely takes time and discipline. Thanks for watching, and feel free to subscribe for more financial basics.